All right. So welcome. Hope you're doing well. Hope your week is going great. Your trading is going great. I'm going to introduce you to a concept that I think is going to be really interesting to a lot of you. It's the shockwave that's created by gaps. It's really the new era of gaps trading. So let's get started. As always, before we start, a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. So make sure to agree to that before proceeding. All right. So here is what we're seeing. We're seeing stocks making 300+% gains in a day. I saw a stock the other day. It was a couple months ago, actually. SPI go up 4,600% in one day. From $1 to $46 in one day. Imagine just buying 1,000 shares at $1, and then 30 minutes later, you're up $45,000. So we're seeing stocks making irrational moves for sure. But the thing is, if you're Warren Buffett, you might tell me stay away. But the thing is, as traders, there's more opportunity than ever before. So it's good. It's all good. Whether you agree with it, don't agree with it, it's all groovy. It's wonderful. And the beautiful thing is, we're no longer, to some extent, competing against people on Wall Street, because retail traders are piling in. We have millions and millions of new retail traders that are not very sophisticated, like the HFTs, the high frequency trading systems on Wall Street. And so that's who's creating all of these moves, irrational moves. We see messages like these that are attracting a new army of traders. One Reddit day trader claims to have turned $53,000 into 11 million in just over a year. Obviously, because Bitcoin has been on fire, anything Bitcoin related like SOS, Riot, Mara, they're ripping, they're crazy, going crazy. Cannabis the other day we saw in just a few days, a lot of the cannabis stocks doubled and tripled in just a few days. I was in one of them, which was CRON, CRON. We saw, of course, GameStop shares soar an incredible amount and then fall also 90% from 500, from 480 something to $40. That's 90% loss. COS is another Reddit stock, up 480% in one day. This is the kind of stuff that attracts a lot of the retail traders out there, and that's who's on the other side of our trades. And that's wonderful because they're easy to take advantage of to some extent. So the little guys are winning, and if you're a little guy like me as a trader, you can take advantage too. The big guys are not winning. This is not a good time to be, I don't think, a whale. It's more a good time to be nimble, to be quick in and out, right? Because stocks are moving at the speed of light, a lot of stocks. The Melvin Capital, hedge fund targeted by Reddit board, closes out of the GameStop short position for, I don't remember the exact loss, like 3 billion, I think, plus. And then, and then the next day, the stock crashes, right? I saw GameStop drop from $480 to 120 something in one day, and then went back up to 300 before falling back down to 40. This is the S&P 500 since 1980 or so. You can see the volatility. We see the 1987 crash, market dropped more than 20% in one day. We see the volatility during the dot-com bubble, right, boom and bust, during the housing bubble from 2007 to 2009. And then we see no volatility pretty much from 2010 until the pandemic happened in 2020. And then the spike, the volatility is back. So this is where we're at today. Volatility is great if you know what you're doing. So your choices are, you can either fail, and again, volatility is your best friend if you know what you're doing, or adapt, or you can argue with it. You can argue this is irrational exuberance, this is irrational behavior, I'm not gonna touch it. Okay, you can win the argument too and still not make any money. Which one would you rather be or do? Would you rather adapt and make a lot of money, or not adapt, maybe argue with it and fail perhaps. I would definitely rather adapt to the current market environment. For those of you that are not familiar with me, my name is Sami Abusaad. I'm been a professional trader since 2007. I started in 2005 and I went full-time in 2007. I'm the director of education at T3 Live and I run a bunch of things. Okay, I used to be an accountant. I worked for a big four accounting firm, KPMG. For those that are familiar with the accounting, the public accounting firms out there, obviously it was one of the Ivy League firms. Very hard to get into. There's only 4 of them. But I really, it was hard to wake up in the morning and to go to work. I just did not like it, and I struggled to do the job that I was supposed to do. And I graduated summa cum laude, so I was, you know, I was pretty studious, always did the right thing, and only to find out I majored in the wrong thing. So that was me, and I quit my job 4 years after I started and went full time. But for today, I want to talk about a few things. First, I don't believe in getting rich quick schemes. I don't believe in that. I do believe that you can take advantage of the shockwave era that we have right now. Okay, and I'm going to show you how to do that in the next few minutes. Of course, you're not going to be able to take advantage of it if you are lazy or if you're not willing to do the work, if you're not serious about this. So this presentation is only for you, for those that are serious about it. If you're not, this is not for you. I can tell you that much. Okay, my goal is to show you how to capitalize on fast moving stocks, how I do it. So let's take a look at the type of moves we're seeing right now, and just so you're aware, and this is what we really want to catch. SENS, 67% in 7 days. This is typical. This is nothing crazy. SNDL is my #1 stock in 2021 so far, up 84% in 1 day. Okay, and it doubled the next day, I think. SOS Bitcoin stock, 190% in 2 days. Okay, actually in 2 days, basically it went from $4 to 16. Okay, that's actually 400%, but it closed up 190% in 2 days. Closed up, okay, but it actually went up 400%. GSAT, 342% in 6 days. FTFT, you name it, right? And we can keep going on and on and on. But the concept that I'm going to share with you here is very simple, okay? It has to do with the shock that gaps create. This is NTAP from last week. I traded it live while running the mentorship program. Okay, NTAP had a very small gap. This is not a Reddit stock. It's not a crazy stock in any way, shape, or form. It's a normal stock. It's a NASDAQ stock, large cap. Nothing wild about it. But look what it did. This is a daily chart. Okay, from again last week. Not sure which day, Thursday I think of last week or Friday. The stock printed a wide range green bar. Okay, the day before earnings. The next day it gapped under it. This is shock. Why is that? Why is that shocking? Where does the shock come from? The shock here is, you see the green bar right here, the big green bar? That means people bought it. That's what that means. And there's no tail. Like, if you can, do you guys see my cursor? You see my cursor? There's a tail there on that big green bar. It means some people sold it, but the day before earnings, people didn't sell it. They did not sell it, so they went long and stayed long. And when the stock gapped down the next day, every single person that bought it, hedge fund manager, Reddit trader, big money, small money, smart money, dumb money, every single person that bought it was now trapped, was underwater, because the stock gapped overnight. And so when they, next morning, they're sitting on losing positions. Again, this is shock. So when you see that, you know you can predict what will happen that day. Some people will sell. As they sell, because they're underwater, as they sell, the stock drops. As it drops, the people that decided to stick with it are now their losses are getting bigger and bigger, right? Some of them get out and it drops some more. As it drops more, Do you see what I mean? It starts the snowball effect, and it just sold off all day to close at the low, So this is the kind of gap I'm talking about. Sure, I showed you some stocks that went up 100 to 300% in 1 or 2 days. This thing dropped like 15 maybe. I don't care about so much the percentage. I just want you to understand the concept. Okay, so gaps create shock value that can last for days or weeks. I've seen gaps, I mean, I see it all the time, but I've played gaps that put an end to the downtrend forever. Like the stock bottomed and went up after that for years and years and years. Okay, and I've seen gaps also put in a top, and the top lasted months, if not years. So the shock value can last for just a few days, and I'll show you how you can tell, and it can last forever, almost forever. Now, as a swing trader, I look to take the very first setup that forms after the shock value gap. Okay, the very first setup that forms after the shock value gap. I don't swing trade on the day of the gap because it's a little bit unpredictable, right? But I swing trade once the stock settles down a little bit and gives me a setup. And this way, I'm letting the best trades come to me. All I have to do is track the gaps list. That's all I have to do, pretty much, and scan the gaps list. Okay. Now, as a day trader, I scan for the gaps list every morning before the market opens. So I already have the gaps list, and then at the end of the day, I just go over the gaps list one more time, looking for those shock value gaps and the setup that forms afterwards, and I save them in an Excel spreadsheet. It's pretty easy. I let the best trades come to me. Let's now look at some of the trades that I did last month. I'm not going to even January. There's a couple of things that I want to show you from January, but I'm not going to December of last year. I'm not going to any of those months from last year, the crazy months we had with unbelievable plays that performed beyond my wildest imagination. I'm not trying to pick and choose. I'm just going to show you a few from last month. How about we do that? Here's the first one. Now, this one, actually, the first call on it, newsletter, published, I'm not just telling you this is when I played it. This was actually published in the newsletter, okay, on January 21st. But it was also played on February 9th. Now, why, you might say? Well, we have a little gap right here, which the chart got squished a little bit, so you don't see it. But we have that breakout, and then we have the 1, 2, 3. Okay, so that was the first entry. The second entry on it, added to the position right here, this day, which was, again, February 9th. And in 3 days, you tell me, how much did the stock go up in 3 days? From the first entry was at 102. The second entry was, I believe, at 110. Again, published in the newsletter before the market even opened. It went up to 425. Okay, that's in 3 days, 300%. Now, this stock in particular should have been my biggest winner in February last month. It wasn't, but that's another story for another day. I'll go ahead and tell you why. Because when it rallied and got to the target, okay, I wasn't around. I was at the dentist. I had some dental issues last month. I was in a lot of pain, and so I ended up getting out of the stock at 214, which was this day, this red bar, the second red bar. So I missed out on the play in a huge way, but this should have been the #1 play for last month. Okay, now how did it all start? From a breakout that actually was that came on a small gap, and then a 1, 2, 3. This is called the 1, 2, 3 pattern right here, and then the pullback, the buy setup. Okay, let me show you some more. This is PRTA. PRTA is the symbol. Now, do you see what happened, guys? This is the daily chart from at the end of February. The play was in March, just not too long ago. So check it out. Or no, the play was, I'm sorry, this was the play was in February, not March. So check it out. The stock put in 1 second. I just want to make sure you can see my cursor. So the stock dropped first day, second day, third day, fourth day, fifth day in a row on pretty nice volume. The volume was actually increasing, and then on the day, and then on the fifth day, gapped up gapped up over 5 red bars in a row. 5 red bars in a row. Guess what? What's happening to the shorts now? This is what's happening. You see the girl, the little girl trapped in the TV? It's trapped. They're trapped. Trapped traders. Get used to that concept. It's powerful. Trapped traders. So I told you, I look for the first setup that forms after that shock value gap. This was the gap that I'm talking about. Okay? And then this is the breakout. You see it, the breakout? And then that was the play that I called in the newsletter. Now notice it was about 14 something, $15. And so how many days? 1, 2, 3, 4, 5, 6, 7. In 8 days, it almost doubled. Almost doubled. So again, you see the shock value here from the gap and then the setup. So that's what I look for. That's what I look for. So in 1 day here, I mean, that was amazing. It went up over 50% in 1 day. This was over 50% in 1 day. Okay, the big green bar. And overall, almost 100% in just how many days did I say? 7? I think in 7 days. And this is, again, I'm not picking and choosing. This is just from last month. I'm just showing you plays from last month. This month is only, we only have 4 days in, so not enough to give you a sample of the plays that I look to play. Now, when you have a wide range igniting bar, a quick happening wide range igniting bar. So if you have a wide range igniting bar that pops quickly, that's almost the same as a gap. It's not as good as a gap, but it's almost the same as a gap, because also a lot of people are not on hot using speed keys on the keyboard. They're new to trading and they're just getting started, and they don't. So when a stock pops like this, it also leaves a lot of people trapped. So when I see a bunch of red bars and then a big pop, guess what? That's also like a gap almost. So I take the very first setup that forms after that. This is ANY, called in the newsletter on February 4th. And in how many days? 1, 2, 3, 4. It doubled in 4 days. That's a buy setup after an igniting bar. Okay, this is CRON, cannabis stock. Do you see that little gap? That was not a little gap, by the way. That was like a 15% gap, maybe 14, 13, something like this. This was not a very little gap, just so you know. But where's the shock value coming from? If we're not gapping over a big red bar, we don't have a wide range igniting bar, where is the shock value coming from? You want to see it? There it is. This is called long-term shock value. When a stock gaps and the gap ends a long-term trend, in this case it was a downtrend, that creates what we call long-term shock value. So the PRTA, short-term shock value, and long-term at the same time, because it also ended the downtrend. It also ended the downtrend and broke out, but mostly short-term shock value, because we had 5 red bars in a row. Okay, this one created long-term shock value by ending the long-term downtrend. So the hedge fund managers that were short, now they know it's no longer in a downtrend. They better cover. So this is when it was played, called in the newsletter on February 2nd. Long. As you can see, it went up 60. The target was 16 bucks. I got out in the pre-market. It gapped to 15.80, I think is where it opened at, but I got out in the pre-market that day. As you can see, in how many days? Like 7 days or so, 8 days maybe, 60%. Guess that was the entry. That was the exact day that it was called in the newsletter. But guess what? I kind of missed out a bit. You know why? Because remember what I told you earlier? I look to take the very first setup that forms after shock value gap. So I goofed. That's not the first setup. Here is the first setup. You see the 1, 2, 3 right here? That's the first setup, actually. I can take out my annotation tool, but that's actually a 1, 2, 3 pattern. So I didn't take the first setup on this. It was the second setup. And sometimes, a lot of times, they don't give you a second setup. If the gap is good and the stock is hot, it just goes and goes and goes and doesn't give you another entry. So we got lucky in this case that we got a second entry, okay? But that was the first setup. And some might argue, well, what about this breakout here, that 1, 2, 3 breakout? It wasn't clean enough, so no regrets about passing on that. I would pass on it in the future too, but this was a clean 1, 2, 3 on the daily chart. 1, 2, 3 pattern. Okay, so we talked about gaps that create shock value. And I showed you some examples of real plays. But what about plays where there is some shock value? The stock did end the sideways trend on the daily chart. There is some shock value. But check it out, with a lot of overreaction. Guess what? That's when I do a gap fade, F-A-D-E. I'm fading the gap because I'm thinking there was an overreaction. Gaps create a lot of emotions. The ones that went long the day before are now going crazy because they got trapped, right? The ones that shorted, perhaps they're excited. So it creates a lot of emotions, and sometimes that leads to an overreaction in the price the day after the gap. So this is EHTH, gap down from a red bar, not a green bar. We like them to gap from green bars, and then a big time, look at the sell-off, huge bar. Guess what? That is not a continuation move. I'm not going to play it short. I'm going to play it long if it sets up. And I use the hourly chart for those kind of gaps. So you see that breakout? 3 days later, got to target already. It went up 20% in 3 days. Okay, $10 on a $50 stock. So 20% in 3 days. Okay, I want to show you a few more. This is from January though. I'm showing you this only because I just want to show you what I mean by, I let the stock gap, and if I feel there's an overreaction, then I look for that hourly base breakout. You see it? CALA off the 60-minute chart. Breakout 3 days also, 3 or 4, I think 4. 4 days later, right to target, which was 375, I believe, 375. And then here's another one that overreaction, big gap down, GNW, and notice the hourly base breakout. See it? Beautiful, isn't it? January 8th. This one, went up a little bit and then dropped, so it trailed out, but then it actually continued higher. No, I'm just using this to show you, illustrate the point that sometimes gaps also create an overreaction, and you can take advantage of that too. Okay, got it? Especially gaps that don't have a lot of shock value. Meaning the day before, if you look at the daily chart of GNW, people sold it. The day before, people actually sold it. So, the next day, it's not going to probably fall apart. The ones that fall apart the next day are usually the ones where people bought it the day before. Okay? Because then there's an abundance of sellers.
Do you want to get rich quick stock trading scheme? Well, then look elsewhere. Want unsexy but proven tips from a professional trader? Well, then I'm your guy. I'm sharing these trading methods for free in my ebook, Unsexy Trend Analysis Secrets that generate beautiful profits. This book is focused entirely on the same trading strategies that I use and refine every single trading day. Now, I'm not promising that these methods will make you an overnight millionaire, of course, but they are the foundational skills behind my many years of success and have benefited the countless students that I've shared them with. I can't wait to share my methods with you, and I know I will be hearing from you soon. Hit that link now.